Hey guys, it's that Dividend guy coming at you with another Robinhood portfolio update. Happy Wednesday. Hopefully everybody's having a GGD, a great green day in the market. You know I always wish the best for my viewers and subscribers. So guys, we're going to take a look at the overall portfolio, how it's performing, as well as the buying power and our individual holdings, how they're performing, see if there are any deals within the portfolio, as well as the watch list and what prices I would want to buy these stocks at. So jumping right in for today, we are down right around $920, a 1.5% loss. Interested to see what's down for today and see if it's anything I want to purchase more shares of. Then for that 1 week mark, we're down $700, a 1.2% loss. That 1 month mark, we are up $1,800 with right around a 3.2% gain. That 3 month mark, we are up $6,100 with an 11.5% return. Year to date, we are up $9,400 with a near 19% return. That 1 year mark, we are up $10,300 with a 21% return. And then all time, we are up $23,900 with a 67% return all time. Buying power sitting at $30.14 after my purchase of Realty Income and T. Rowe Price. I bought a single share of each. Jumping into the single stocks, starting off with Realty Income, the monthly dividend payer, sitting at $62.57. We've got 171 shares, $10,700 of market value. Average cost is $65.02. 18% of the portfolio is in Realty Income. Today we're down $41. Total, we're down nearly $420 with a near 4% loss. Guys, I love Realty Income. Their occupancy has been great across the board through pandemics, through recessions. I'm not worried about their income. I love the business model. I love the fact that the tenant takes care of all the renter's insurance, the upkeep of the buildings, all of that. All Realty Income truly does is they own the buildings and they collect the rent. And guys, that's why I'm so bullish on the company. I do know there have been some YouTubers that have switched out the position, put it into something else that's higher growth, and I totally understand that. But this is my real estate play. This is where I want my money to be when it comes to real estate exposure. I don't want to own a property because I don't want to deal with the tenant issues. I don't want to deal with the interest rates, all the extra BS that comes along with owning an actual property. So Realty Income is my exposure in my portfolio, and I plan on holding it for a very long time. And if it stays at this depressed value, I will buy more shares. I've been waiting for it to drop a bit below my average cost. It was for a while, but it wasn't at the level I want to purchase it at. And now that it's sitting, below $63 per share, below my 65, and stayed there for a while, I do want to add more shares to this position. Next up, we've got Altria sitting at $52.96. Looks like it dropped a little bit today. We've got 320 shares of this Dividend King, around $17,000 worth of market value. Average cost is $47.27. Around, say, 30% of the portfolio is in Altria today. Then it is down $358. Total loss of 2%. Then total return, we are up $1,800 with a 12% gain. And guys, normally I think of big tobacco like I do big oil, and a lot of people dislike the stock, they hate the product, and the market reflects that. I don't know why it is up. I've kind of done some research, but it could be because the dividend just hit 7%. I do know some rating agencies have been bumping up their price targets for the stock, and that's something that I don't usually pay attention to. There's a lot of news when it comes to stock market investing. I don't usually pay attention to it, but if it benefits me, I could sell at a gain of almost $2,000 right now, but I'm not interested in that. I am more interested in the overall dividend income growing, and it did just bump up a little bit because Altria bumped up the dividend to $1.02 per share. So my income went up like $12 every quarter simply for just holding the shares. So that's what I'm going to keep on doing. The payout ratio is about where management wants it to be. I know they made some pretty bad investments in Juul and other things, but the core of the business is still big tobacco, even though they're trying to diversify away from that. But I'm more bullish on big tobacco. I smoked for a while, so I want to get some money out of a company I put money into. So this is by far the single biggest dividend payer. It will remain that way for quite some time, simply because I have so much money in it, and the dividend is growing at a slower rate. But I am going to use this to buy stocks like Visa or Apple. That's really the goal here. Is Altria is going to funnel into some of those higher growth positions and stocks I'm a little bit more bullish on, but I do still see the value here in Altria and owning it for the long term. The only reason I would sell is if something drastically happened with the business, they cut the dividend, or they did a few more bad investments that really hurt the company that they couldn't write off. Then Coca-Cola is sitting at right around $71 per share. We have 15 shares, almost $1,100 of market value. Average cost is $60.54, right around 2% of the portfolios in Coca-Cola. Today we're down $8.40. Total, we're up $156. Guys, we have a 17% return here on Coca-Cola. Again, just like with Altria, I don't know why that is happening, but I do see that there have been some ratings to bump up the stock price. I'm saying that they are more bullish on the company. Normally when I see news about Coca-Cola, it's that the overall sales are going down, the dividend's not going to grow, blah, blah, blah. You know, it's always bad news. So it's interesting to see the overall sentiment change between Altria and Coca-Cola. I'm just going to keep buying more. I love the company, love the products. I drink Coca-Cola or a Coca-Cola product every day. So it's just one of those I'm very bullish on, and I do want it to be one of the pillars of the portfolio, but I'm not buying it at these prices. I'm not buying it at a near $11 markup per share. I want to buy it at $59 to $60 or below. Next up, we've got Apple at $221.77, 6 shares, $1,300 of market value. Average cost is $210.88. 2.2% of the portfolio is in Apple. Eventually, I want that to say 22% or even up to 40%. I really do love Apple, and I want it to be the biggest single position in the portfolio. We're up $9 today, up $64 with a 5% return. Guys, I just need to allocate way more capital to Apple, but not at these prices. I do anticipate there might be a pretty big drop when it comes to the next iPhone launch. That's generally what happens. Even when it's good news, people still freak out about the long-term growth, and it tanks. So I'm hoping to take advantage of that in the near future. I do know that the Apple event's happening. I think it's in October, so we have about a month here, a month or two away from that big launch. And just depending on how that goes, the sentiment behind the new products, the amount of people that really want to update or upgrade their devices, depending on the AI rollout. It's just, there's a lot of moving parts. And I'm excited to see the stock tumble a little bit, just because I want it to be around that $200 to $210 range. So I'm going to sit here on the stock for now, but I do plan on putting a lot more capital within the position and making it the single biggest position in the portfolio. I'm a long-term Apple believer, and I know right now the position doesn't reflect that, but that's just because the price is so inflated. If a deal does come around with Apple, I will be allocating a lot of capital towards the position. Then we've got AbbVie at $194.81, down a little bit today. 95 shares, $18,500 of market value. Average cost is around $95 per share. 31% of the portfolio is in AbbVie. Today we're down $430. Total, we're up almost $9,500 with a 104% total return. Guys, this is by far the best single position I've ever invested in. I did get a lot of flack when I originally bought it, because when I did my analysis, people said, oh, when Humira drops, when the patent drops, the stock's going to tumble, the stock's going to crater, you're going to lose a bunch of money on it. I'm not in it for the overall value of the company, right? I'm more worried about the analysis of the economics of the company, and if they have the ability to keep giving me more dividends over time. And they have proven, even without Humira, even without the patent protection, they can grow revenue year over year, which is insane considering that Humira was the single biggest selling drug, most profitable drug in the entire world. So I have a lot of faith in AbbVie. I do know also that Warren Buffett sold out of this company, and when he did, I got a lot of flack on like Instagram and Twitter about holding the company, and I believe in it long term, and I'm obviously showing that here because I'm still holding on to it, and that dividend income is still growing. So as long as they continue growing the revenue and the profits continue to keep growing, I'm not worried about it. The only way that I would switch out is if they cut the dividend massively and or they lost like a big revenue stream due to like a scandal or something like that. But overall, I'm very bullish on AbbVie long term. Next, we got Visa at $282.94. Right now, I only have one share. Average cost is around $270 per share. 0.5% of the portfolio is in Visa. Today, I'm down $250. Total, I'm up $14, up about 5.5%. Guys, I want Visa to be one of the single biggest positions in the portfolio. I want it to be number 2, right behind Apple. But honestly, if it overtakes it eventually, I would not worry about it. I'd be just as happy with Visa being the number 1 position, and I would not be surprised if that happens over time. I just want to buy it at a little bit less of a price than this. It did drop $2.50, but I needed to drop like $10 before I put more of my capital into the position. And then T. Rowe Price, I just bought another share, sitting at $103.54. We have 101 shares, $10,400 of market value. Average cost is right around $110 per share, so a good buying opportunity still here for T. Rowe Price. Around 17, almost 18% of the portfolio is in T. Rowe. Today we're down $20. Total, we're down $620 with a near 6% loss here on T. Rowe Price. Guys, if you look at the long term, yes, it fluctuates quite a bit due to the overall economy, but if you look at it back in 2021, so 2-3 years ago now, it was all the way in the 200s. So I do think that they still have very good revenue growth. They have great margins. I'm not worried about the economics of the business. I understand the fact that it is going to fluctuate overall based on the economy. And I understand that a lot of people do just what I'm doing, which is self-directed investing. And a lot of people might not want a company like T. Rowe to handle their investments. But a lot of companies do their 401ks through there. They also have individual clients that are extremely wealthy that put trust into T. Rowe Price. So overall, I'm very bullish on the company. I do think eventually it could get back up to that 200 range. And even if it does, I don't plan on selling it. The only way I would sell a company is if the economics of the business change drastically in a way that I could not foresee, or if the dividend gets cut to a point where I find something better with better reliable growth when it comes to dividends. So overall, guys, that is the portfolio. Jumping into the watch list, I'd buy Google at these prices. I'd buy it anywhere under like 170. Then with Berkshire, I want to buy it around $400 a share. And then Costco, I'm not quite sure. That discrepancy is pretty big, $540 to $900. So I'd probably try to get it around $600 a share. So with that being said, guys, thank you so much for watching. Remember to hit the subscribe button on my channel, That Dividend Guy. Hit the like on this video. It does help me out for the YouTube algorithm. Make the YouTube gods bless us and get me up to that 1,000 subscriber mark that I'm busting my butt towards. I am going to be doing daily videos now, Monday through Friday. I'm excited to be recording. I know I took a month off, and it really hurt us when it comes to the consistency, and that's my fault. So I'm excited to be back, and I'm excited to be posting videos again. So thank you guys so much for watching, and I'll see you tomorrow with another Robinhood portfolio update. Take care, guys.